My pick is Vertiv. It is a data center build-out play. CapEx is expected to grow about 50% between 2025 and 2029. And in that kind of a backdrop, this company is able to probably put up a 15 to 20% organic growth. They have a backlog of $8.5 billion. Their book-to-bill is running at 1.2 times, and they've had record orders of $3.2 billion, which rose 25% year over year last quarter. And what I think is the real story is not only is it the growth, but I think eventually the operating margins, they're troughing right now, and I think they can accelerate from this quarter going forward, and their target is to get to 25% by 2028. So you add it all up, Frank, and I think you can see something like $7 to $10 in earnings power.
All right. Steph, you and I, we've actually talked about this company a couple of times. One other time on the halftime report, you've been bullish on it for a while. One question I have for you is valuation. When you look at some of its other peers in the space, you look at Johnson Controls and Eaton, they trade at a significant discount to Vertiv. Why not go with one of those names that offer similar things at a much lower valuation?
Well, I also own Eaton, and I also own Quanta Services, so I definitely have exposure to this theme. But I think Vertiv actually has the fastest growth. And as I mentioned, the margins are so depressed. So if you can get this great growth of 15 to 20%, I think I'm being conservative, by the way, on the organic growth. If you can get that and you can get margin expansion, I think that they have much more operating leverage. Not to say that the others don't, but I think this one, they have more upside and better, and just overall better growth.
All right.
Plus, not only that, best-in-class management.
You know, I was just going to come to that point. So that's one of the points that makes you really like this company. I've had actually the pleasure to meet both the executive chairman, David Cote, who's formerly the Honeywell CEO. So obviously a lot of connections when it comes to tech, industrials, et cetera, and also their CEO. I had a chance to interview him as well. Any concerns about the fact that David Cote has his fingers in quite a few pots? He's actually the executive chairman of another company that just went public that does metal credit cards. And also, when you have the kind of success this company has, often other companies start looking to poach your executives. Any concerns that this success, they might be victims of it themselves, the company, I should say, where their executives may be pulled in other directions?
Well, Dave Cote, I think he can do a lot of different things. He's an exceptional manager. He was an exceptional CEO at Honeywell for over a dozen years, and look what that stock did under his reign. So to me, as long as he's there, I think it's very positive. If he's not there, they have a very, very strong bench. They have a new CFO, also with a proven track record to focus on margins and productivity. So I think they'll be just fine. But I don't see Dave Cote going anywhere anytime soon.
One other question. This stock's become heavily levered to the AI trade. If that cools down in any way, is that also a risk for this company, or do they have other lines of business that can also move the stock higher?
No, I mean, this one will trade exactly with the AI data center story, but I do think that I don't think we're in a bubble in AI. Data centers, we don't have enough of them. We have 11,400 data centers in the world. The U.S. has 5,400. We're at 45% of the data centers. You got to get that to 30,000 easily to meet all of this demand. But to your point, if the AI trade cools, this one will as well. I just don't see the AI trade cooling.